Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to review a simple scenario for velocity banking of how to pay off a credit card debt of $10,000 for someone who is a kind of a low salary entry-level job worker. Now, if you've never heard of velocity banking, I would recommend you click the link below to the Velocity Banking 101 video to get a firm foundation of velocity banking is about, and then just come back here to continue your studies. So for this scenario, we're just going to assume three things. One is that it's an entry-level job worker, so about $36,000 a year in salary, and this person only has one credit card debt of $10,000. Now, I know that for someone who makes about $36,000 a year, $10,000 of credit card debt can really be stressful. And maybe this person YOLO'd and decided that they're going to travel or Airbnb in a short amount of time. You could rack up a lot of money doing that. And the third thing too is we'll throw a little curveball here. The rent must be paid in cash. So usually when we do velocity banking, say, oh, pay everything out of your line of credit or credit card. But maybe this landlord says, I don't want to accept credit cards. If you had a line of credit, it would be easier because it would essentially just be cash. But with this person, you can't swipe the credit card for the rent. So we'll just throw that in as a curveball and we'll see how that factors in. And then the question we're trying to answer is how long will it take to pay off this credit card using velocity banking, right? And this is kind of a semi-realistic scenario. So for example, I had a $10,000 balance here, $280, and this was like only about 3 months ago. So as you can see, it's about end of August right now. In the beginning of May, I had this bill, and we're just going to kind of say, okay, let's pretend that this person has this credit card. How can we pay it off easily? In about 10 months, I think. Okay, we're going to verify that. So if we go in here, first thing I want to do before we actually go into the spreadsheets is to show that $36,000, according to this website, is kind of semi-low, right? It's not like minimum wage, but it's an entry-level job, and the median household income is about $67,000 a year. So if you combine, have a dual income or like family income that you combine, you could pay this off a lot quicker with velocity banking, although the expenses might be a little bit higher. But let's just assume for now that it's just about $36,000 a year. We'll just call this person average American. So first thing we have to do when engaging in velocity banking is we have to write a budget, right? So budget's really easy. Paycheck 3,000 a month, expenses 2,280, and then after all expenses are paid, we put this into our checking savings 720. And then after we've done our quick budget, then we have to do an expenses breakdown. So this has to equal all of this, right? So expense breakdown, our expenses are easy: credit card, rent, other. So the rent is cash only, and we'll show you how to factor that into the equation. The credit card is so the expense breakdown is really simple when it comes to like just one credit card. But what's really important is when you have many credit cards or many debts or many lines of credits, and you're trying to pay all off, they have to be each its own line item in your expense breakdown because they represent cash flow that's pretty much eaten away and that we're trying to recover when we're doing velocity banking. But in this example, it's much easier to figure out what we're going to recover when we're engaging in velocity banking. So I'll show you what I mean by that. Next step when we've done our budget is we have to select our operating account for velocity banking. So we always select a line of credit. So a line of credit is just basically a tool where you borrow money, you can repay it back, and then reuse what you've paid back or the amount that's available to you. So a credit card is a line of credit, even though it doesn't have a line of credit in its name. It's a line of credit, although it's a little bit different from, let's say, personal, business, home equity lines of credit. But since this person only has this credit card, we'll just use what we have, right? We'll just use what we have. So here, what we're going to do is we're going to do the calculations here. We're going to use this credit card as the line of credit. So now I'm going to put this here, 22,300 credit limit. Balance is about $10,000, right? Let's see. Okay. So now we're going to do that, and then we're going to start show the numbers of how it would be done in velocity banking way. So basically, the velocity banking way is that you use your line of credit as your main operating account, and you try to put your paycheck, your entire paycheck, into the line of credit. But in some instances, you're unable to do that. That's perfectly fine. So in this instance, we can't pay rent with our credit card, right? So we'll factor that in. Okay, so I always mention this is that whatever we use as our velocity banking account, this expense goes to zero. Why? Because when we put our entire paycheck into that line of credit, this expense doesn't really matter, right? It's when we separate it out and we're paying from our checking account, then this becomes an actual expense. And whatever is in our checking and savings that's just left over, that's what we store in case of emergencies. But what we're going to do here is we're going to put our entire paycheck or almost our entire paycheck into a line of credit, satisfy that minimum monthly payment, and that minimum monthly payment just doesn't really matter anymore when we put our entire paycheck in there. Okay, so this will become zero. Rent is still 1,000, even though we're doing velocity banking. No, the rent doesn't magically go down, and your other expenses don't magically go down when you do velocity banking here. So now this is about two. So here's the thing. So now what we're going to do is going to differentiate between what goes into the line of credit versus what goes into the checking and savings, right? So because the rent has to be paid in cash, we have to put $1,000 here. Even though we don't want to, we have to put in $1,000 here. Now, our expenses from the line of credit is $1,000, right? So $1,000 from the line of credit. Now here, instead of our entire paycheck going into the line of credit, it's going to be this minus what was in your checking and savings. So it'll be $2,000, right? So basically our cash flow that's going to be used to bring down the credit balance is going to be the deposit, whatever we're depositing, minus our expenses. So the cash flow is also going to be $1,000. Okay, so $1,000. So what was happening is that because we were doing the average American way, we only had $720 a month in checking savings available. But when we do it the velocity banking way, we've kind of increased what we can use to pay off our debt. And now we're doing $1,000 of cash flow, right? Okay, so hopefully that'll make sense. But if it doesn't, just kind of keep doing the exercise over and over again. So basically, when we're doing velocity banking, ideally we would like to have put the entire paycheck in, but it's okay. We're just going to put $2,000 in because the landlord wants the rent in cash. And I know we can use plastic and stuff, but let's say we don't have access to plastic or it's too much of a hassle. So we're going to pay this directly in cash. So now what we do is we put $2,000 here in the line of credit that automatically satisfies the minimum monthly payment and actually makes the interest go to the minimum because the interest is recorded by the average daily balance. And so when you put your entire paycheck here, the average daily balance is at its minimum, right? And then eventually the expenses creep up and then you take out the expenses here. So the line of credit expense is about $1,000. So about every month or so, it's going to go down about $1,000. And it's really easy to calculate that. It's just the previous month's balance minus 1,000. Now, again, or also minus the cash flow if you want to go by that either. Now, again, this is just an estimation. We kind of do interest a little bit separately just because it makes things a little bit easier, right? So let's see how long it takes us to pay off that balance. So let's call this month 0. 1, 2, 3, 4, 5, 6, 7, 8, 9. So about 9 months, or we could, if you want to just add an extra month, we'll give it 10 months. But we only took about, even though we're not like balling in money, we're only making about $36,000 a year. Let's see how long it took to pay it off in about 9 to 10 months, right? 9 to 10 months. Most people who are in entry-level jobs would stress out about having a $10,000 balance in a credit card, and we just paid it off in about 10 months. This is amazing, right? And not only that, when we just had mostly $720 in savings, now we have $1,000 of cash flow to pay off this line of debt much quicker when we do it the velocity banking way, right? Now, the next step is just to calculate the interest. How much interest are we going to calculate? Well, this is an estimation, right? Because they usually take it by the average daily balance, but I'm a little bit lazy and it's okay to do monthly estimates. So basically the way that you do an estimation of the interest, you take the previous month's balance, multiply the interest rate and then divide by 12. Now the interest rate is always quoted annually. And the reason why you divide by 12 is that gives you the monthly interest rate. So what I'm going to do is I'm going to take the previous month's balance. So H2 times 0.21, and then you divide by 12, right? And then you just apply this formula over and over again. And then we can just go ahead and sum this thing up. There's this little sum button in Excel. You just click that and it'll sum all, I think, whatever is highlighted above. So we'll just do that. Yeah. So now I just click enter and I paid about $1,000 in interest on the credit card, right? So I'm pretty sure if I just kept making the monthly payment over and over again, it would have been a lot more. And they always had that truth statement like, hey, if you pay off this credit card and make extra payments, which you can certainly do, you're going to pay off this credit card easier, right? And we are technically making extra payments, but the bank never really talks about putting your entire paycheck into that line of credit and then using it as an operating account, right? But here we're able to do that off in about 10 months. We only pay $1,000 interest. Yeah, the interest rate's 21%, but we're doing really well. We're breathing easier. And now, since we don't have the debt, we're gonna have $1,000 just into our checking account. I'm sorry, checking savings account extra every single month. And because we're not in debt, we have a lot more breathing room. Whereas the average person, if they had $10,000 of debt and they're doing things from their paycheck, right? The average American way and not doing the velocity banking way, they'd be having a little bit of struggle. They'd be like having a little bit hard time breathing. But here we just paid it off in 10 months, no easy. And think about this, if you're like a six-figure worker, this is just chunk change, right? You'll probably pay this off in like, I don't know, 2 months, right? But if you're an entry-level worker, you pay it off 10 months. So you see that the speed is still there. Maybe you just have to wait a couple more months, but you're not drowning in debt anymore. You're not drowning in debt. This one credit card that you thought was like, oh my goodness, my life is over. No, not anymore. Not with velocity banking. All right. So this is Korean Atlanta mentorship. If you have any questions, comments, leave them below. If you're interested in mentorship or interested in joining a group, go ahead and click the link below to the Google form and then just go ahead and submit it. Or you could email us by finding out our email address in the About page of the YouTube channel and just go from there. All right. Have a great day, everybody, and we will speak soon.